It is, hang on, I gotta move this over there. Oh, nope, get over there. All right, today is Wednesday, July 18th. I don't know why that was there. Wednesday, July 18th, 2018. This is your daily Forex trading strategy session. Comment allez-vous? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Today, we will focus more on the yen pairs than we had an opportunity yesterday. Yesterday, we did several of the dollar pairs, and we did some gold and some oil. So today, we're going to take a look at the Z-yen pair. Of course, answer any questions or concerns you may have. Can never get my glasses clean. I'm new to glasses, so anyway. So, hope you enjoyed yesterday. It was our first webinar in many, many weeks. Felt good. Felt real good. It was really nice to be back. Thank you for allowing me to be in your life. I'm thrilled to have you in mine every day. Chuck said, had a ball. All right. Hey, my name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. The overriding goal for these presentations is to help you put together trade plans. I'd like you to be not just a successful trader, but an independent trader where you can conduct your own technical and fundamental analysis, put together a bias, and then be able to trade that bias. Low risk, reasonable reward. That's what we're looking for. Do these sessions 7:30 in the morning. Reason for that is it's approximately London lunch, and it's a couple hours before New York gets going. So it's a great opportunity for us to get together as a community. Thank you very much for being a client of TradersWay.com. If you are not yet a client, please visit TradersWay.com and open an account today. Take less than 30 seconds to get that demo account going. Please do that, okay? All right. So one of the things we looked at yesterday was this idea of, could you, in the context of this, be a bear? Some people said, yeah, maybe. Could be a rabbit, could be. Okay, one of the concerns is that it appears that the 55 is in control on the daily chart. If I can get my drawing tool to change colors. There we go. All right, so here you're bearish and aggressive. And here you're bearish and conservative. The difference being which moving average is in control. So if you're bearish and conservative, you're very, very open-minded to the possibility of a double bottom somewhere around this area. Okay? And now we're sort of in here, which is a great place to be concerned about the double bottom. Drop into a smaller time frame, and we can take a look at what's happened. This is that gray area is the bottom that I drew yesterday. Okay, on the daily, you're thinking, all right, somewhere around here, there could be a bottom. What could we fold into that analysis besides the previous bottom, which is a price bottom? What market bottom could we have? The first thing is you could see a monthly pivot, and then in here you could see the weekly pivot profit zone. So folding all that in, you'd say this whole area here has the potential to be the bottom, but remember what gave you the sort of the heads up to the potential bottom is this. So even before all of this nonsense, you're thinking, well, if we make our way down to here, this could be a bottom because on a daily chart, this is a daily 55. Okay, so we're talking, a week ago, you were worried about a double bottom down at this price. Okay, now unpack this a little further. The fractal geometry of this says, okay, if you are a bear, because the market's been generally bearish for 3 months, you could say, well, using swing trading as a strategy, weekly swing trading, that strategy states that this is a great place. In fact, this is the primary price that you would like to sell. So even last week when you were here or here or here, you would have said, well, next week if I had an opportunity around 132.97, so it's not even around, it's specifically that price. Or you could say somewhere around 1.33. 0.00000, you could sell. But what would your target be if you were a seller at 132.97 on Monday? Based on swing trading strategy. It would be conservative target 130.42. So 130.50. That's the conservative target. Okay. And the aggressive target is 1.2979. Okay, which is here. And then, of course, the monthly is right in the middle. So that works as well. So you could say 130, right? That's what I teach you, right? Yeah, that all folds into it, Greg. So what I've taught you over the years and years and years and years and years and years is that selling at 133 is really logical if you're a bear and your target should be 130. That's classic Wayne, isn't it? That's a Wayneism. Standard operating procedure, boring. But I like boring. Classic. Cool. So now what? Well, it's Wednesday and we've hit our target. Is there an opportunity for a counter trend trade? Why? Okay. Wednesday is a plausibility. Tuesday's better. Okay. Wednesday is okay. Yeah. We could flip and go back the other way today. But if it was tomorrow, if it was Thursday, no. So you have permission. Now, I wouldn't buy it saying it has to counter trend or it's going to counter trend. We don't know that. But let's say it came down and really ideally it should respect either a pivot or a psych level right? Like if it came down, hang on, my mouse is a little slow. All right. If it came down, hit the monthly, and then did this, you see how it touched the monthly pivot to the pip, but didn't go 1 pip below? So you could say, or you could argue, that market participants see that and they respect that number, and bears are getting up. Because that's the first part of a reversal. In this case, bears getting up. So you could go long in that scenario. Or you could do it off of here. Or you could do it off the psych level, which might be a little less, somewhere in there, right? Whatever it is, make sure it's logical, that some price level that a bear would logically, okay? And if so, you have the permission, if you so choose, in particular if you're a bull on pound dollar, that's what you would look for. You'd start using technical analysis to confirm your hypotheses that we're in a place of reversal. And what are the reasons for it? Well, you have your weekly swing. This area here is very, 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 very logical. I put it in my book 10 years ago that is what happens. Cool. But what else is there? On the daily chart, you have the 55 in control, which in that situation, you often see double bottoms, and the double bottom price is here. So now, if it did this, you have the opportunity, especially if you're already a bull. Okay? Easy, right? What's this? Who put a little little support here? Huh. That's weird, right? What's the target? If you drew this and said 131, 111, is your support, where's your resistance? Oops. What? So we drew this yesterday, and that's the target. 132.84 or 64? 64. Yeah, that's 150 pips. Okay, no big deal. If you were a bear, Friday, you would have had a sell up here, and that's what your target would have been. That's Friday's sell. This is Monday's buy. Cool, right? Once again, virtues of simply having a bias. If you were a bull on this pair, I really don't see any other opportunities for you to trade except, that's a very basic buy if you're a bull. If you're a bear, you would have missed that. But if you're a bull, even though the conditions were not that great, if you bought it simply because you're a bull and you know how to swing trade, then you're like, oh, look, this one, I got lucky on this one, it panned out. And that's the virtue of trading properly. You don't get paid because you outsmarted the market. I think a lot of newer traders try to do that. They try to be, a rocket surgeon and be smarter than everybody else. Really what you should do is just simply know that you're a bull or know that you're a bear Therefore, it's all predefined where you should buy and sell. You should know where bulls buy. You should know where bears sell. That is not that complicated. So if you simply do what you're supposed to do, buy where bulls are supposed to buy, then whether you make money or not comes down to how many other people are on you, are with you on that bias. In this case, what I'm saying is that's not an amazing entry, but it's the only entry. like it's definitional, right? Like, this is the price you knew even on Friday. You knew that somewhere around 131, 1111111, a bull would buy. So you buy it, you drop your stop just below the support, and you're like, yeah, it's not really good. I really don't feel confident in this. I've had better. I've seen better. I want better. And by Tuesday afternoon, oh, takes off. You're like, cool. That one worked out. And you're like, cool. Nothing exciting about it. Nothing smart about it. You just bought where bulls are supposed to buy. And that's the difference, because if things fall apart, you have all kinds of opportunities to like get out. You can leave your stop way down here if you want, or if you had this situation and you're like, oh, this is great, and then you're down here, you can get out here. You don't have to wait for it to fall over here. You could just say, well, this petered out, and we were supposed to stay above that, right? And then, of course, if it bounced back up and turned bullish again, then you have another opportunity and try then, right? But my point is, it's not smart, and you're certainly not smarter than everybody else. This is simply, and the reason I highlighted it is like, I don't know much about nothing, except that's where bulls buy. And if other bulls buy too, you get paid. And you get paid more than you're risking, right? Even if you left it, right? So let's say your downside risk, you buy at the price you're supposed to buy, and you put your stop. The standard operating procedure is put it below the S. So there's your stop. And this is where you bought it. Okay? And you could do it like, you could have a working order here on Monday, and even though it didn't hit till Tuesday or Wednesday, right? It puts you in, whatever, put your stop there. And you're done. So you're risking this many pips for this many reward. How many times can you afford to be wrong in a scenario like this and still not lose money on the long run? Well, I'm guessing 4 or maybe 5 times. You can be wrong 4 out of 5 times. Or how about this? 3 out of 4 times. I think you can go with me on that, right? You can be wrong 3 out of 4 times and not lose money. Or, yeah, you can pick it out that way, right? 7 out of 8 times and get 0. That's cool, right? Now, the frustrating part, and where I think people get messed up, is that they're observing short periods of time. I'm thinking years, and you might be thinking days or hours. So you could say, man, I did that all through July and didn't make any money. So I'm not going to do it anymore. You're like, wait, you tried for 3, maybe 4 weeks to be a bull and buy at support, and you're quitting now because you didn't make money? Well, on the period of long run, let's say in the course of 1 year, not one, M or one H, but 1 year, if you just over and over and over and over and over again, if you're, as a bull, only buy at support, or as a bear, only sell at resistance, I think you will find you will make money. Even this dude here that sold on Friday, right? Or the dudette. Even if she sold at 132, it dropped almost 131. Like, you got out of there, certainly break even, maybe some pips, right? Put some pips in her purse. And being wrong. Now, as a bear, is it sort of knowable information as a bear to sell at 32.00000 USD CAD on Friday? Yeah, well, it's a front run. It's an R trade. You could try that. Now, without the pivot points, it's probably more difficult. But with the pivot points, it's less difficult because of the knowledge of knowing that 32-ish is somewhere around the next week's M3, and the M3 is where you want to sell. So you're like, well, I'm going to trade it like a double top. It's Friday afternoon. Everyone's going to take profit on their bullish trade, right? You can look at this and say, oh, well, people have been in this for 2 or 3 days, and they're going into the weekend, so they're going to bail on their trade. It's going to come down. I'm basically at next week's M3, and maybe I get lucky on this. And yeah, it only dropped 90 pips. Only 90. You're like, I don't mess with only 90, right? But it could have worked out, but it didn't. Still would have made money. Thank you, Andrew. Yeah, the chicks dig him. They're like, I love a gray-haired man with big, thick glasses. True story. Cruise around Harvard campus. 2 young girls come up to me, maybe 20 years old. And they're like, excuse me, can we take a photo with you? I'm like, yeah, sure. What's up, baby doll? She's like, yeah, well, we have a class on grieving, and we're doing a group project, and we'd like a photo with you, like, yeah, as if we're grieving the loss of our father. And I'm like, oh, so like, you want me to be your dad? They're like, yes, sir. I'm like, oh, okay. Yeah, you're dead. Yeah. Sure, baby doll. Yeah. Welcome to college, bro. All right. So that's a little bit of trading. Let me move over to the yens. Where do you want to start? First of all, logical or illogical? But it's not it. Don't say stuff like that, Joe. Okay, don't say it has to. And, a lot of people say, oh, I can't go any further. Sort of thing like, oh, well, it has to come back. No, look. Okay, let me put it down. If you were a bull, first of all, I beg you every day to make a decision. You could have been a bull the first day of the month. Okay, no doubt about that. The buy zone is here on July 1st, and the target is here. Not here, not here, not here, not here, not here, not here, here. To the exact pip. It's not like, oh, well, it's got to come down sometime anyway. No, 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 no. 149.3065 is where it's supposed to go. And then as a bull, you stop buying. You couldn't make something more obvious than that. You're like, only 17 days in advance. There's a difference, right, between it's going to go up to 149.3060 versus, well, it's got to come down sometime, right? Now, the second part of that is it's kind of about roughly the middle of the month. Is there an opportunity for a counter trend trade? Yeah. Well, yeah, and I wouldn't even say for sure. Potentially. There's a difference, sort of, right? Like, you can be open-minded to that. What would make you confident enough to actually counter trend trade this? You got the exact price, and look at that, guys. Again, look, this is not a pip beyond the target that you identified at least 17 days in advance. Double top, sure. Lower low, okay. And then the old head and shoulders trick, right? But what you're talking about are just reversal patterns. A reversal pattern at a reversal pivot. It's not that brilliant, right? So it really comes down to how you want to play it, right? You can do the lower high type thing. What about like the bearish engulfing candle? Is this important? If you were already waiting, think about it. You're already expecting that to happen. So how do you trade that? Pivot. Yeah, pivot. So why don't we zoom in a bit? Okay. Let me preface this again so I'm clear. This is your expected resistance. 17 days in advance, you knew that. Then we get there and it does not go one pip beyond. So that's important. If you see the bearish engulfing candle without the rejection at obvious resistance, then it's just fool's gold. Who knows what it means? But because it's hardcore resistance and it was clearly respected, then a bearish engulfing candle is important. So the guy that sold the book with 258,000 different types of candlestick patterns, the book says if you see one of these 258,000 candlestick patterns and they don't occur at support and resistance, then ignore them. But if you see one of these 200 candlestick patterns and they are at support or resistance, then they're valid. Well, couldn't it just be the fact that you're at support or resistance that's important and not necessarily the candlestick pattern? Oh, yeah, sorry, I just ruined the book. But you should look at that and say, I think this is this might reverse, this might reverse, this might reverse, this might reverse, this might reverse. Holy smokes! It just fell hundreds of pips. Right? Now what? Talk to me, Goose. How about a 50% retracement? Is that tradable here? That's the sweet spot, by the way. Okay. What about the next one? Oh, that's a 618. Okay. So let's say you don't like fibs. Gotcha. You got it. Delete. Okay, cool. Let's do this over again. You don't like fibs, you like price action. How many people have completed the price action course? Chuck? Jimmy? Gregor? Go. All right. My style is I like to see the down, down, down. This lower low. Oop, where'd it go? This lower low is lower than this low. So you drag this across and it becomes your future sell zone. So even though you're down here, you're thinking if it retraces somewhere near this gray line, I want to sell. Awesome. Then it makes a new lower low. So you're down here, even though this ended up doing a hanging man. When you're down here, this would have been a big red candle. And you would have looked to the left. This is the old support. Drag that across. And somewhere near that line, you want to sell. So that's your sell zone. Down, 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 down. Cool. So now you've made a new lower low. We're way down here. So all I'm saying is you look left. You can drag this across. And later today, for example, if it did retrace here, I want to sell somewhere around there. It could be just in front, it could be at, it could just be a little bit above, but it's just a rough guide. Down, 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 up, up, sell. Down, 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 up, sell. Down, 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 up, sell. That works too, right? I guess you know what? I would have had it like this. This is even better. Okay. Or you can use the fib. Okay? All time frames, Johnny boy. All of them. Even 1 minute. 1 minute, 5 minute, 15 minute, hour, 4 hour daily. It's all the same. Cool. All right, so we dissected that. Let's kind of move a little more quickly. Looks like it's a little bit rangy. This has more to do with yen than it does CAD. Monthly art is a top. So if it doesn't go up any further, you're going to look for an S at the bottom, which is right here. So if you're a bear, or really neutral, but if you're a bear, that's going to be an important stop for you. And if you're a bull, you're trying to buy a dip. But that doesn't look ideal, does it? So I'd look at that and think mediocrity. Okay. Taking a look here at Kiwi Yen. On Monday, this was your buy zone. And on Monday, this was your target. Good job. This hits target on Tuesday. If you're not a bull, what are you thinking here? No, John, it's not high end. Yeah, counter trend. What's your target? Yeah, your target would be here. Cool. Easy peasy lemon squeezy, right? Swissy yen. I know you don't trade this often. Okay. Let's talk about it. The first day of the month, this is what your buy zone would have been as a bull. Well, I guess it's only a buy zone for a bull, right? Here's the thing. This is the sell zone for bears. So you sold it and it didn't work out. Right? Probably didn't lose money. Yeah, well, John, we know the trend, so there's nothing really we're going to learn here. That's all I'm saying. We know that information, right? So anyways, if you're a bull, okay, now, if you did buy down there, what was your target? Monthly M4. Cool, right? Monthly M4. Cool. So that's done. Loving it, eh? Remember, I don't know if it's true anymore, but there was a time in my life when people told me it was common knowledge, which means everybody knew, and you knew that I knew, and I knew that you knew, and you knew that they knew, and they knew that I knew that you knew. That's common knowledge. There was a time in my life it was common knowledge that you just can't make money in the summer. Just like you can't make money at Christmas time or, you know. Well, what does that say to you for July? And that doesn't get any better. It doesn't get any better than that, I guess is what I. Oh, sure, yeah, John. If you get some volatility out of it, it's a scalp, sure. And so I'm arguing that trading can be great in the summer. Maybe it feels slower, but you know, You shouldn't listen to them. I guess the way I should say it this way, it was common knowledge, 95% of all traders knew it, you can't make money during the summer. Right? Yeah, of course, John. All right. Just 95% of traders don't know how to trade properly at all anyway. So I'm just trying to point that out. Like, there's logic to this. If you wanted to sell it, you'd have to look for a reversal pattern. I don't see the reversal pattern yet. You don't want to wait too late in the month for it either. But if it did something like this, okay. Oops. Now, for those that bought this on Monday, the buy zone was here, and your first take profit is here at the week, the monthly R2, weekly M4 cluster. And we're still above the 4-hour 21. So there's still a reasonable chance we do this today. Okay? Still reasonable because it hasn't reversed. That's why you don't want to outsmart the market and say, oh, it's hit M4, I know it's going to reverse. No. Now you're trying to outsmart the market. If you see it here and then it does reverse, you can follow it up on a sell here. You don't want to guess. Guessing's for degenerate gamblers. It's haram. Okay. It's grar. So yeah, so if it does reverse there, then you know how to trade it because you can say, oh, it's reversing. But right now, that's still the plan. And it's still the plan because somebody bought it down here, and as of now, because of no reversal pattern, there's no evidence that these people have bailed out. Okay. Well, John, so yeah, I'm not disagreeing with you, John, but I guess I come from, doing this 10 or 15 years. So there was a time when that would move the market, 120 pips. And I could scalp it and bag some dough. Now it tends to move like 20 or 30 pips maybe. And or maybe it's the gray hairs or something. I find it less exciting to scalp the news, just because even non-farm payrolls moves the market with 50, 60 pips, not 400. So maybe it's just me. It's not you, it's me. So I'd rather spend the time teaching you guys sort of the hardcore foundational skills than scalping housing data, which has been on trend for 7 years in a row now. That's all. So it's not you, it's me. We'll move on to Aussie. I probably said this yesterday, clear as mud. The one thing that you have is like, it's basically a counter trend, which can often not work. You don't want to sort of counter trend it just because. I think 9 out of 10 times, if you sold in this situation, all it would do is come down and then up. Okay. Is there clear evidence of reversing? You're like, it's not an amazing price. It's not an amazing pattern. It's just not quite amazing yet. If you're a bull, this is your buy zone, by the way. Okay? And you'd probably set this up fib, right? Kind of like that kind of thing. It's not amazing, though. Okay, no, John, I disagree with that. Oh, cool. Right on, John. Yeah, adding a larger size lot on a scalp, that's just not moi. Okay? But I can be you. I don't like that, but I can whatever. This is just gone, man. This is just gone. U.S. dollar strong. What happens here? I don't rightly know. Yeah, yeah, that's fine, John. Absolutely. Pips be upon you. All right, so those are some of the yens. Mucho gracias, Johnny boy. So pound just dropped off the face of the earth. Gotta do some gold. So the thing with gold is I don't like the way it's set up on the monthly. So if it's not set up well on the monthly, I find it hard to believe it's not trading technically as well as I would like it. For example, the R is a little too high, so it predicts the S, right? That's the R, and that predicts the S. So that worked out. But if you're an R to S week, what kind of trend do we have? Sideways trend. And so in this case, the general operating procedure is to buy it off the bottom because it's not going to go down. It's not even really going to go up is the idea. So maybe on Monday you start looking for evidence that it's going to hit this and go up. And then Monday's bottom, and you could have done it on Friday, this is the M3. So that should get us to about here, which is pretty close to our sideways move. And then, so whatever happened yesterday, gold fell. And there wasn't much warning for me. Whatever it was, it brought it down. And it's just, again, mediocrity, right? Minutes, hours, days, and weeks, Jeremiah. And every once in a while, at the right time of year, like I might buy something in September and take profit in December. So every so often, months. Okay. But I like scalping, I like spot trading, I like swing trading, I like position trading. So I like to trade, and I like to trade with all different styles because they offer me different types of opportunities. On different accounts, yeah, depending. Okay. But I've been known to have, over 100 trades open. And it's not common, but I've done it. Years ago, back when I had an office in Atlanta, I remember one time I shut down the webinar. I'm like, goodbye, everybody. And I click, and then I flip over to my trades, and then I go get a cup of coffee. I come back, and people are freaking out because I actually didn't close down the webinar. I shut off the recording, but I clicked the wrong button or something. But anyways, people were still there. And I couldn't see it because it was on a different screen. So I'm flipping around, and my live account was open, and there was 100-something trades, and people were just like freaked out. And I'm like, oh, wait. Don't look at that. And then I said, look, the only thing I want to point out here is my available margin. And I pointed it out. So I had all those trades open, but I had 98% or something available margin, which means almost like 98, essentially 98% of all those trades were profitable. But I only do that certain times a year and stuff. But you know, being in grad school and stuff, that's very difficult to do. But the interesting thing is we are going to start planning such situations probably about 3 or 4 weeks from now. But that's how you make, you know, 20,000 pips in a month or something like that. All right. Go back to Euro. Down. Yeah, John. Yeah, so the next swing trading group will be, you know, towards the end of August. Yeah, but we enter them like swings, but really what that is, it's not a swing trade. Is a swing trade is, you know, you're buying at a monthly low and riding up to a monthly high. This is a different situation. I enter it. Well, I enter it in any way I can, really, whether it's a daily swing, a weekly swing, a monthly swing, whatever. I just try to enter it, but my exit is based on time, not on price. Because remember, what we have on our chart is price on the right and time on the bottom. And so it'd be a price entry and a time exit. Yeah. But we'll leave that for some other day. When you're alone. All right, so here we go. Bop, bop, bop. Well then, John, if you sign up and things go well and we're blessed by the Forex trading gods, I will blow your mind. Yeah. You'll never forget your first 1,000 pip trade, and you'll never forget your first 10,000 pip month. All right, oil. Top, 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 top. So, if this is your top, that's the predicted bottom. Okay. Currently, we're caught on an S bottom, which is really good news for bears. Really, I think. Because if bulls were involved in this market, they were supposed to buy here. And this is kind of where we were, you know, not long ago. This could have gone up dramatically higher high kind of stuff, right? And I would not expect that here. So that's the difference. I'm more worried about this going up at 68.5 than I am at 66.5. So now that we're down here, I feel a lot better. And what probably will happen, and I'll do this by changing color. What'll probably happen here. Now remember, I have this. I'm looking at this through the lens, of a bearish trader. A bear is going to think this. Okay, that's what a bear is going to think, and they have that confidence because the bulls didn't buy. Now the bear sold. What was the sell zone on Monday if you were a bear on oil? Not making that up. Was that right, Ian? Got some terrible. What made it terrible? On price or in volume sales? Yeah. Cool. Well, summer's supposed to be good. The numbers are supposed to be good in summer. We're getting a little bit late, though. Like, people buy houses in April and move in during summer holidays. If you're buying in June, you're taking possession, August? But you got to get in before school starts in September. So, things are supposed to slow down. Now, it's a little early. But what it could mean is it might put a feather in a cap of the doves at the Fed that interest rates have gone high enough to kill the real estate industry. So there's two things. Actually, even one thing. The Fed's worried about inflation, right? But what kind of inflation? There's multiple types of inflation. And sort of asset class inflation is what they're worried about. The stock market going up too far and housing prices going up too fast. Yeah. So in this case, dollar is weakening. Typically, that's good news. But what it's suggesting is nearing the end of the tightening cycle. So it's interesting, right? But like going to euro dollar. Let's go back into this. Okay. And what time is it now? 6 minutes ago. So yeah, it's moved that far in 6 minutes. Let's go in here. So I would have entered here and been done. So the scalp would have been done by now, as far as entering. So my standard operating procedure, as I'm sure most of you know, scalp the pullback. And that would be done. In that first 6 minutes, it moved from 1612 to 1625, like 12 pips, right? And so what I was saying, there was a time, excuse me, there was a time when news came out like that, and it would go up 120 pips, not 12 pips. So over the years, I have moved from scalping. I used to scalp a lot. New scalping, but also price action. I would use a 1 minute and a 3 minute chart back on the Dealbook 360 platform. a lot. So I would start on a high time frame, and then I would drop to the small time frame. And I tend not to do that now. I like to trade Fridays and Mondays, and I'll grab myself a nice swing and let the thing move 200 pips. That would be, Ian says, why has there been such a change in the volatility? And that's the maturity of the market. There are many more traders. So it just sort of just smooths everything out. There's less pops and gaps and jumps. So when I started, it was about $2 trillion. Now it's like $6 trillion a day. So there's 300% more people, which means there's less surprises. Yeah. So I've adapted, like I said, John's scalping this, and that's cool. Like, look, it's still working. It just, I guess my taste has changed over the years, which I think is a fair and honest answer too. So I just tend to do a lot less of it. And, and I focus more on day trades, week trades, month trades, and less, trade that, this 1 hour kind of move. Yeah, so John brings up a point, like typically in summer, I've used the analogy in years past of shooting at rabbits, because sometimes in the summer you get like a move, and then I don't know what that was supposed to do, but anyways, let me delete that. That you would get very little follow. Like you might make 50 pips in a day, and then the next day it's 50 pips back down, and then the third day is 50 pips back up. And, I found swing trading to be less reliable because there just really isn't trend in the market. So that therefore you would scalp more, and if you can make 25 to 50 pips for the day, hey, right on. But they're rabbits, but you're not trying to hunt big game because you just know there isn't big game. Right? So I'm like, yeah, so, after the June Fed meeting, you just kind of go into scalping mode and just enjoy hunting rabbits, just enjoy it. But after several weeks, you're going to get sick of rabbit stew and rabbit meatloaf and rabbit pot pie, right? Another analogy that I used, like scalping to me is an income trade. It's kind of like a job. It's what you do to earn cash. Okay? But you'll never get rich. It's just income. Okay? Other types of trading, which I also do, like there's nothing wrong with the scalp. It's simply income. Other types of trading that I do, they're more wealth-based. I might not make money today or this hour on a lot of those trades, but I plan on being in the trades longer term. And, let's say 3 days from now, if I opened up a trade today, that's one thing. I'm making money today and I had to earn that. But if that trade is still open 3 days from now and I'm profitable, I'm already working on, the new trades 3 days from now. Like on Friday, I'm working on Friday's trade, but my Tuesday trade might be open. And if it's up 50 or 60 pips overnight, I made 50 or 60 pips overnight, but I didn't have to do anything. I didn't have to do any new analysis. That's Tuesday's analysis. All I did was move my stop to break even, right? So I like, on top of the income trade, right? That just makes you rich. But rich people have jobs, right? So it's a job. Every day you got to sit down, scalp, pocket the pips, and you're done. You get paid by the hour almost, right? The wealth trades, they accumulate and they grow, and you're collecting interest, and you're accumulating appreciation truly as an asset now, right? You might have $5 million of a currency that you invested into 3-4 weeks ago, and it's growing in value. You're not doing anything different. You didn't have to ride your bicycle 3 miles and somehow that was the payoff. You're not doing anything anymore. And that's wealth. Making money while you're sleeping. Well, how do you do that? You have your stop at break even, right? You're making pips and you're earning interest income, right? So you kind of want both. This time of year, for scalping, you're earning income, you're paying the bills, you're eating, right? You're eating rabbit stew, better than going hungry. But on the long run, if that's the only thing you did, 15 or 20 years from now, your life is not going to be much different. That's why you got to have other types of things in your life as a well-rounded trader, right? Yeah, Rob, that's letting it run, sure. Okay. The better way is to actually be able to analyze the market, and instead of just trailing your stop, actually know where the support and resistance is going to be. So one of the things I did is I tested that many years ago. And if you are good at price action and support and resistance and all these things that you will improve upon over the years, in scalping, it most often is more beneficial, and what I mean is more profitable, if you simply do the work. If you buy in at the true support and then you exit. This takes discipline. Most people think it's discipline getting in a trade. Most of the discipline is getting out of a trade. Anyways, if you drive it up to resistance, you're not chewing on your fingernails and saying, oh, I hope it goes up, or I hope it, all this kind of stuff. You just take the profit at the price you're supposed to. On the long run, because sometimes it does collapse, but sometimes it goes further. On the long run, based on the law of averages, you will be more profitable because hitting your resistance and then waiting 6 or 7 or 8 pips before you actually get out, that adds up over hundreds of trades. And you'll find as your technical analysis gets better, it's not often that you're so amazingly right on your scalp. It hits resistance and then pops up and goes up to the next resistance level anyways. It doesn't tend to go that way because even on the 1 minute chart, guys, it's going to do this, right? It's going to go up, it's going to go down, it's going to go up, it's going to go down, it's going to go up, and it's going down, and then it's going to go down, right? And you're like, when do you get out? Well, very often these levels are very logical. And if you simply get out there and you maximize your entry exit on a scalp, and you're never getting out late, because when you get out late, you're getting out here. You're getting out here, right? So it's avoiding these pullbacks when scalping on the long run, because remember, this might get you into trouble too. On the long run, over hundreds of scalps, over thousands of scalps. I mean, think about it. If you're purely scalping, you can make 10, 20, 30 scalps in a day, right? So over the course of thousands of scalps, just getting out is going to be better than letting it run. Because letting it run, you're asking yourself to get lucky. Like, I hope this breaks and makes me big money. And it generally doesn't work like that on the long run. On the long run, it just generally doesn't. That's better. That's better, Rob. That on the long run, that's what you want to go for, right? You want to remove all hope from your strategy. And it's all logic, it's all intelligent, right? And you're looking at it, everything on the aggregate. So in a situation where, let me clear this out, because this does happen. So let's say this is your pivot profit zone. You have a big pink area up here, right? Oops. Okay. What's supposed to happen up here, guys? What's supposed to happen? That's where bulls are supposed to take profit. Okay? And how often does it do this? Assuming like that's a weekly pivot profit zone or something. Sometimes, but not often. Okay? Occasionally. So you're better off just to get out. Because 70% of the time it's going to do this. So do you hold and hope? No. Because here's the other thing too. It makes you weak. And once you weaken, you're vulnerable to making mistakes. Okay? And so if I have a line in the sand here, and right, and I take profit here, and then it does this, I don't feel bad. I don't. I'm experienced enough to know that that's luck. And I'm not interested in luck. Because to catch that, I have to make a mistake. And that's the worst kind of luck. What you don't understand, I made a mistake not taking profit here. And if it heads up, that's not good luck that you're in it and you're making money. That's bad luck. And you might have to be around long enough, but I hope that never happens to you, because to be around long enough is a difficult thing. But what it's going to do, it means you're going to need to make 4 or 5 mistakes until you realize this was bad luck. By mistakes, I mean you don't take profit here, and you're like, well, that last time I did it, I made an extra 30 pips, but it does this on that second move. And then you do it again. Well, I've made 30 or 40 pips in a situation like that. Oh, well, 2 in a row. Well, that's just unlucky. And then it's 3 in a row and 4. And then you realize 5, you're making mistakes, and you gave up 5 profitable trades because that one is much more memorable. Somehow it's these profitable trades, when you get lucky, are the worst time of thing, because it takes so many more times to wash out the good experience to realize that good experience was bad. Okay? Like, so it takes a long time, but if you're making this mistake, very often you're making 2 or 3 other mistakes. And the worst case scenario is you make a mistake and you blow up your trading account and you quit trading and all this other kind of stuff, right? So that's the worst kind of mistake. So if you can avoid it, just trust me on this one, over the course of 1,000 scalps, get in where you're supposed to, get out where you're supposed to, and be done with it. Okay? Move on, right? One and done, and on to the next one. And with that, I'm going to bid you adieu. Once again, thank you for being clients of TradersWay. Please open an account at TradersWay if you're new. I am very soon, at some point in the near future, putting together a week-long day trading course for all clients that have live trading accounts with money in their trading account. Should be within the next few weeks, right? I got to wrap up. I have 2 papers I need to write to wrap up summer school. Then I'm done. Yes, I will post this to YouTube like I did yesterday. So once again, thank you for being on my team, and I will see you tomorrow. Peace on earth. May the pips be with you. May your profits be above average. Thank you, guys. Yeah. See you tomorrow.